Quarter 2016 Earnings Conference and Conference Call. This is Elizabeth Tsang, TSMC's Director of Corporate Communications and your host for today. Today's event is webcast live through TSMC's website at www.tsmc.com. If you are joining us via the conference call, your dial-in number are in listen-only mode. And this conference is being viewed by investors around the world. We will conduct this event in English only. The format for today's event will be as follows. First, TSMC's Senior Vice President and CFO, Ms. Laura Ho, will summarize our operations in the third quarter of 2016, followed by our guidance for the fourth quarter of 2016. Afterwards, TSMC's two presidents and co-CEOs, Dr. Mark Liu and Dr. C.C. Wei, and Ms. Ho will jointly provide our key messages. Then we will open both the floor and the line for the Q&A. For those participants on call, if you do not yet have a copy of the press release, you may download it from TSMC's website at www.tsmc.com. Please also download the summary slides in relation to today's earnings conference presentation. As usual, I would like to remind everybody that today's discussions may contain forward-looking statements that are subject to significant risks and uncertainties, which could cause actual results to differ materially from those contained in the forward-looking statements. Please refer to the safe harbor notice that appears on our press release. And now, I would like to turn the podium to TSMC's CFO, Ms. Laura Ho, for the summary of operations and current quarter guidance.
Thank you, Elizabeth. Good afternoon, everyone, and thank you for joining us today. My presentation will start with the financial highlights for the third quarter, followed by the guidance for the fourth quarter. We have just finished another strong quarter. Despite a less favorable foreign exchange rate, our third quarter revenue increased 17% sequentially to 260 billion NT dollars, exceeding the high end of our guidance even in July due to the strong demand in the overall smartphone market. Gross margin declined 0.8 percentage point sequentially to 50.7%, mainly due to an unfavorable foreign exchange rate and the margin dilution from higher 16nm contribution, partially balanced by a higher utilization rate and cost improvement. R&D expense continued to increase, reflecting a high level of development activities for 7nm, since our revenue grew faster than R&D expense. Total operating expense to revenue was 9.9%. Operating margin was 40.8% in the third quarter. Overall, our third quarter earnings per share reached $3.73, a 33% increase QoQ and a 28% year-over-year. And ROE for the third quarter was 31.2%. Now let's take a look at revenue contribution by application. Our third quarter business benefited from the new mobile product launches as well as a robust overall smartphone demand. Revenue increased across the board in all product segments. Communication and industrial standard increased by 19% and 16%, respectively, while computer and consumer also increased by 3% and 8%, respectively. In terms of revenue by technology, combined revenue from 16 and 20nm continued to grow and represented 31% of wafer revenue in the third quarter, compared to 23% in the second quarter. Meanwhile, our 28nm capacity remained fully utilized and represented 24% of our wafer revenue in the third quarter. Moving on to balance sheet. We ended the second quarter with cash and marketable securities of 517 billion, which is 151 billion lower than the second quarter. That was as a result of 156 billion of cash dividend payment in July. Correspondingly, current liability decreased by 141 billion NT dollars. On financial ratios, accounts receivable turnover days decreased by 1 day to 42 days. Days of inventory decreased by 10 days to 44 days, mainly due to reduction in working process as a result of stronger wave shipments and improving cycle time on advanced nodes. Now let me make a few comments on cash flow and CAPEX. During the third quarter, we generated 126 billion NT dollars from operations, spent 104 billion in capital expenditure, paid out 156 billion in cash dividend, and repaid 12 billion of corporate bonds. Our overall cash balance decreased 158 billion to NT dollars 464 billion at the end of the third quarter. In US dollar terms, the capital expenditure spent in the first 3 quarters of 2016 totaled US dollar 6.7 billion. Our full year CAPEX budget is now expected to be slightly above 9.5 billion, which is at the low end of our guidance. I have finished my financial summary. Now let's turn to the fourth quarter outlook. Based on our current business outlook and exchange rate assumption of $1 to 31.50 NT dollars, we expect fourth quarter revenue to be between 255 and 258 billion NT dollars, which represents 1 to 2% sequential decline. Gross profit margin to be between 50.5 and 52.5%, and operating margin to be between 40 and 42%. This concludes my remarks. Now I'd like to turn the podium to Mark for his comment.
Good afternoon. I'd like to start delivering our key messages. Let me start from our near-term outlook. We concluded our third quarter with 17% quarter-to-quarter and 22% year-to-year revenue growth. This strong growth was driven by our major customers' new mobile product launch and a stronger than seasonal growth from our other customers. In the third quarter, we gained our foundry market share across most technology nodes. With strong sell-through, we estimate fabless POI exiting the third quarter will be only slightly above seasonal level. We saw the smartphone sales improving coming into second half this year. High-end smartphone demand today is better than we previously expected. The 4G Plus deployment in China and the 4G upgrade in emerging markets also drive end demand. PC gaming and TV gaming markets, driven by product refresh, are showing good growth. Also, deep learning is increasingly applied to many diversified areas. So we forecast our fourth quarter revenue to be about flat from the third quarter. The demand for high-end smartphone will continue to improve. We estimate the year-end inventory reduction will be relatively mild. So exiting 2016, the fabless POI will be slightly higher than seasonal level by about 2 days. For the whole year of 2016, we forecast semiconductor market revenue, excluding memory, will have 1% growth. Foundry revenue will have 7% growth, and TSMC revenue will achieve 10% growth in US dollars and 11 to 12% in NT dollars. Now I come to the leading edge technology status and competition. First, on 7 nanometer. Our 7 nanometer technology development is well on track. The progress of yield improvement and device performance development are both on schedule. We are confident our 7 nanometer technology to be ahead of our competitions. Our plan of risk production qualification in 1Q17 remains unchanged. Our 7 nanometer has been adopted not only by high-end mobile customers, but also by high-performance computing customers for GPU, gaming, PC and tablet, virtual reality, server, FPGA, automotive, and networking applications. They all have aggressive product tape-out plans, starting from early second quarter 17. So we expect to work on silicon qualification of more than 15 customer product tape-outs in 2017. Now on 5 nanometer, since the beginning of this year, our 5 nanometer technology has graduated from pathfinding to enter technology development phase. Recently, our EUV technology development made good progress. The throughput and reliability of EUV scanners, the sensitivity of EUV photoresist, and the quality of EUV mask blank and pellicles all improved. Of course, there is still a way to go. We will use EUV lithography extensively in our 5 nanometer flow to improve density, simplify process steps, and reduce cost. A plan of risk production qualification in first half 2019 remains unchanged. Now I want to report to you about our growth platforms. I will report to you our first two growth platforms. The first is mobile platforms. We believe mobile will continue to be a growth driver for TSMC in the next few years. We forecast worldwide smartphone unit growth rate be at mid-single digit in the next 5 years. The silicon content of smartphone will continue to increase, driven by increasing smartphone features such as dual camera, security sensing, AR, VR, and migration to 4G, 4G Plus, and 5G, particularly in high-end smartphones. Those high-end smartphone features will also proliferate to mid- and low-end smartphones. There are other smartphone features yet to be seen. For example, deep learning for AI inference will also increase smartphone silicon content in the next 5 years. More high-performance processor will be used for context-aware applications and provide new user experience. For this mobile platform, we will complete developing 7 nanometer in 2017, upgrade 7 nanometer in 2018, and complete developing 5 nanometer in 2019 to support smartphone and high-end mobile products on an annual cadence. For mid to low-end mobile and wearable products, we will continuously offer cost reduction technologies with 28 HP+, 16 FFC, and its derivative technologies. Included on our mobile platform, they are TSMC's highly innovative and differentiated info advanced packaging for low power and small form factor. We also offer our next generation CIS technology, RF technology, SOI RF front-end, power management IC, fingerprint, near-field communication, and various MEMS sensor technologies in this mobile innovation platform. We believe we are very well positioned to grow in this mobile market in the next few years. Now I turn to high-performance computing platform. In addition to mobile, we have also identified high-performance computing as another area of growth. In the trend of digital world, more and more devices are connected, and more data are generated, collected, filtered, processed, and analyzed at all levels, at local, in the network, as well as in the cloud. This trend calls for more pervasive silicon processors for those computing nodes. Recently, deep learning market calls for new levels of parallelism and new levels of compute efficiency from our customers. This rapid development of artificial intelligence technology, allowing machine ability to see, hear, and predict, has huge implication in many industry verticals like healthcare, media, consumer, automotive, and so forth. This silicon content to support AI applications, I think, will be huge. We forecast the total wafer revenue opportunities, excluding memory in this market segments, could reach more than $15 billion in 5 years. To capture these opportunities, we offer optimized 7nm in 2017 and optimized 5nm in 2019 in TSMC's high-performance platform. These technology offers include high-performance standard cell library, optimized metal interconnect, and optimized EDA design flows for high-performance computing design. Our advanced packaging side, we will continue to offer 2.5D and 3D IC integration solution, in addition to the current CoWoS, as part of our high-performance computing platform. They will support increased memory bandwidth for low-power, high-performance computation. Thank you for your attention. I turn the microphone to C.C. Wei.
Thank you, Mark. Good afternoon, ladies and gentlemen. Let me start with 10nm status. We have transferred our 10nm from R&D to production in the third quarter this year. Our first 10nm customer product has been produced with reasonable yield. Defect density and device performance continue to improve in much the same way as we did at the ramp-up stage of every leading-edge technology node. So far, we have received 5 production tape-outs or high-end mobile products. We are preparing capacity for 10nm production ramp-up by the end of this year and expect shipment in first quarter next year. Currently, there are about 2,500 engineers and 1,200 technicians are working in the fabs on 10nm. Additional 1,000 engineers and 500 technicians will be added to our 10nm production team by the end of this year for the preparation of volume ramp in 2017. As to our 16nm FinFET, the defect density and cycle time continue to improve and are very competitive. In addition to mobile application processor, other applications such as cellular baseband, graphic processor for video game, AR, VR, deep learning, and AI have strongly adopted our 16nm solutions. As a result, our 16nm business this year is expected to become more than fivefold of its level compared to last year. In order to support applications for mid to low-end smartphone and wearable products, we continue to work with customers to further shrink the die size while improving the performance in 16 FFC. Now on 28nm. The demand for our 28nm technologies has continued to be strong throughout this year and is expected to last through many years. So we are judiciously adding some bottleneck tools to meet the strong demand. Applications related to mid and low-end smartphones, as well as the Wi-Fi, digital TV, set-top box, flash controller, and others, has found TSMC's 28nm a desirable solution. With our differentiated technology, stable yield, short cycle time, and large capacity, we have been very competitive in this node and are confident to maintain our market segment share for this node. All the nodes from 28nm all the way to 0.35 micron and even to 1 or 2 micron technology has been an important contributor to TSMC's profitability. We developed a broad portfolio of logic-based specialty technologies, such as the CMOS image sensor, embedded flash, power management IC, fingerprint sensor, and MEMS to backfill our legacy logic capacity, which is converted into these specialty technologies. And we continue to earn good margin from this business. Today, we have more than 8 million 12-inch equivalent wafer annual capacity from these older nodes. We believe this is by far the industry's largest capacity on those older nodes. Now let me talk about one of our growth platforms, automotive. There are many new applications being developed in the automotive industry, such as ADAS, night vision, smart and green energy, electrical vehicles, etc. We believe those new applications will trigger or have triggered new opportunities and requirements on the semiconductor industry. For example, inside a car there will be a lot of sensors to collect environmental information, RF devices to connect with the outside world, more video displays, etc. The car also needs a very powerful MCU or many powerful MCUs to analyze data for better safety and functionality. TSMC has been working with customers to develop necessary technology to capture those opportunities. Today, we offer a broad range of technologies, including advanced logic, embedded flash, CMOS image sensor MEMS, and BCD to serve customers' needs. In addition to technology offer, we also put a lot of effort on quality and reliability for automotive platform. For example, in Q3 this year, we start to provide ISO 26262 compliance IPs for 16 FFC for automotive ecosystem. With our manufacturing excellence, which has been demonstrated in high volume production with stable yield, and the broad range of technologies, we are ready to serve this growing market. We estimate the total market of automotive-related ICs measured in wafer value excluding memory was about 4 billion in 2015 and about 6 billion by 2020. We expect our wafer business from automotive-related ICs will more than double from 2015 to 2020. Now let me talk about IoT. IoT is another growth area we have identified. This market is fragmented with diversified products. We estimate the total market of IoT-related ICs, again measured in wafer value excluding memory, was about 2 billion in 2015 and expected to reach about 6 billion in 2020. For those IoT products, we have focused our effort on providing ultra-low power technologies. For example, we offer 55 nanometer, 40 nanometer ultra-low power for low to mid performance IoT product, and 28 ultra-low power and 16 FFC for high performance applications. Furthermore, we also integrate ultra-low power RF and data flash, as well as sensor solutions such as the CMOS image sensor and MEMS to enable machine-to-machine or human-to-machine interface. With our broad range of low-power technologies and specialty technologies, we believe we are well positioned to capture the opportunity in IoT market, and we expect to grow our IoT business at a faster pace than overall IoT market in the next few years. Now I will talk about InFO. TSMC's InFO has been in volume production since second quarter this year. Currently, there are more than 2,000 engineers and technicians working in our long-term side for InFO production. While we are confident that InFO will contribute more than $100 million revenue towards in fourth quarter this year, we continue our effort on cost reduction and yield improvement, both with good results. More customers have engaged with us on InFO technologies for the purpose of enhancing their product performance. Major application is still in mobile product. We are now qualifying for the next generation InFO technology. A few hundred more engineers are expected to be added to our long-term side while we begin our next generation InFO production in year 2017. Now let me talk about the Nanjing project. Our Nanjing project was announced last December. It includes a wholly owned 12-inch wafer manufacturing facility and a design service center for the purpose of providing closer support to our customers in China and to further expand our business opportunities. We broke ground for the fab in early July. The production is expected to start in second half 2018 with 16 nanometer. We believe it will be the most advanced fab producing 16 products in China at that time. Our design service center in Nanjing has already started functioning with more than 50 engineers now and expect to grow to about 100 by next year. We expect this design center will greatly help our customers in China to shorten their learning cycle and speed up their new product introduction to the market. Thank you for your attention. Now I turn the floor to Laura.
I would like to make a few comments on capital expenditure, profitability, and dividend. So first, regarding CapEx. TSMC's 2016 capital budget is estimated to be slightly above 9.5 billion, as I said earlier, which is closer to our low end of our guidance. We have guided 9.5 to 10.5 billion 3 months ago. It is mainly due to improving cycle time, estimated for 10 nanometer. We are able to shorten the lead time for capacity installations, which leads to a reduction of our 2016 estimated CapEx. However, this reduction in 2016 will not change our planned capacity for 10 nanometer in 2017. Our estimate for the capital intensity going forward remains unchanged at around low to mid-30s level for the next few years. I will talk about profitability. In the past few years, despite the higher CapEx, which lead to a substantial increase in depreciation expenses, we have been able to improve our structural profitability significantly. We plan to keep our structural profitability at high level by continual working on price, cost, and the utilization rate with careful planning of capacity. Going forward, we expect to be able to maintain our gross margin rate at close to 50% level. My last comment is about the dividend. Given our target revenue growth rate for the 2016 to 2020 5-year period to be compounded annual growth of between 5 and 10%, and our capital intensity to stay at low to mid-30s of our revenue, we anticipate an improving free cash flow after debt service in the next few years. Therefore, we also expect our dividend per share to increase in the next few years. This concludes my remark.
All right, this concludes our prepared statements. Before we begin the Q&A session, I would like to remind everybody to limit your questions to 2 at a time to allow all participants an opportunity to ask questions. Questions will be taken both from the floor and from the call. Should you wish to raise your question in Chinese, I will translate that into English before our management answers your question. For those of you on the call, if you would like to ask a question, please press the star, then 1 on your telephone keypad now. Questions will be taken in the order in which they were received. If at any time you would like to remove yourself from the questioning queue, please press the pound or the hash key. Now, let's begin the question and answer session. First person raised the hand is Deutsche Bank, Michael Zhou.
Thank you. My first question is regarding the 16nm UTR next year. Given that your key customer may shift to 10nm next year for high-end products, so what is your expectation for UTR next year? In 16nm.
For UTR, actually you are asking for the 16nm business next year. There are some mid and low-end smartphones who are entering into this node. So far so good.
So does that mean you will have a similar UTR level next year versus this year?
Roughly.
Thank you. Second question is regarding your 28nm market share next year. Do you expect it could be still very dominant next year versus this year, given rising competition from tier 2 foundries?
I just mentioned that we are confident to maintain the market segment share. So, yes.
The follow-up question for 28nm is, do you expect the tier 2 foundry can really gain market share in high-end gate area more substantially next year? Because given that since the UMC may try to increase high-end gate shipment next year.
Could you please repeat your question?
Given that UMC may try to increase high-end gate shipment next year, so how do you have a very high market share in 28nm next year?
I just mentioned that a lot of customers find our solution is very desirable, and so again, I would like to say that we are confident to maintain our market share.
Thank you.
Next question will be coming from Credit Suisse and Randy Abrams.
Okay. Yes, thank you. You gave us some good figures on the growth drivers in new areas. Traditionally, IDMs have had a lot of market share in high-performance computing, automotive, and even microcontroller and IoT. Your foundry share is 55%. If you could give some approximation what you expect your share in these, where you put HPC 15 billion, auto about 6 billion, IoT growing to 6 billion. Like if you could talk about what your market share in these, say, traditional IDM applications.
on this high-performance computing, I cited 15 billion in the next 5 years. It's really a rough estimate. Many of the applications we cannot really grasp today, like artificial intelligence. We don't know how fast and what form it will grow. So this is based on current knowledge. And we've been, indeed, this high-performance computing include the data center, network, storage, attached, all the silicon attached associated with the data center. And also include VR and AR and gaming, and that's our definition. Not including artificial intelligence yet. Today, in this sector, we have about 30% share. Of course, we want to grow with this total segment, and we also want to increase our share together with the IDM.
And could you talk about the automotive with the contribution, where you talked about doubling the revenue? If you could give a starting point or market share in automotive.
We are working on this automotive platform across all the technology nodes, actually. So we expect to have grown this area much faster than the market show. Today, most of our products are on the MCUs, and we expect that growing into a lot of high-speed computation, just like Mark pointed out, and also a lot of sensors will come with it. And so we expect to grow the market. So I don't know that way to answer your question on the automotive.
Or if you could give how much automotive is today for TSMC, by percent of revenue.
Today is, she just gave me something. It's below 1 billion.
My second question about the margins, where you're guiding a little bit down in sales, but the margins are improving. And it looks like for next year, that if I caught it right, it was 49 to 50, but it's moved up a bit to 50%. You talked something about cycle time. It's a factor from cycle time improvement, and if you could talk about what strides you're making on the cycle time, or if there's other factors driving that margin improvement.
Cycle time, when I refer to the CAPEX, I was talking about the cycle time improvement. Actually help the capital to be more efficient. That's why we can spend less money, but you get the same capacity investment. Okay? Of course, cycle time helps you as well. So that means when you start the productions and the yield can reach to optimal sooner, of course that will help the margin as well. You were talking about 2017. In my prepared message, I was talking about our effort on structural profitability improvement and our confidence on maintaining the 50% level. Okay. Given this year's depreciation is only increased a little bit, and our CAPEX is very much back-end loaded, as you can see. In the first half, only about 30%. Second half, maybe 70%. So we expect the margin will. We expect the depreciation will go up next year. Although I cannot quantify that number because we're still working on the CAPEX number for next year. But with all those plus and minus reasons, we are still confident that the margin will be close to 50%.
Just one quick follow-up. On the fourth quarter, you have a couple headwinds from currency and utilization, I guess slightly lower. So just the improvement sequentially, is that from a 16 nanometer yield learning, or if there's like a factor that's offsetting that to drive the improvement in the fourth quarter?
16 nanometer will be a key reason because we are ramping very fast in 16 nanometer. And 16 nanometer is the second year of production. I think you still remember you asked me when can we 16 nanometer reach to corporate level. We expect the 6 nanometer will reach the corporate level by the first quarter 17. So fourth quarter is very close to that corporate level. So that really helps our margin rate.
Thank you.
Next, questions will be coming from Citigroup's Roland Xu.
Good afternoon. Last quarter, we thought customers are probably going to adjusting inventory in 4Q, but look at your 4Q guidance now. It seems your customers are actually still building the inventory. So will this inventory correction be delayed to first quarter next year, and we are going to see a sub-seasonal first quarter next year?
I mentioned our estimate that fourth quarter will be flat. It's because we see the end market demand is still healthy. And therefore, we also estimate the previously anticipated inventory reduction at the end of the fourth quarter will be mild. This also supported by our major customers' 60 nanometer ramp. So that supported the fourth quarter results. So I think the end of this year is more peaceful than previous years.
Okay, so that means inventory correction probably won't be the case in first quarter next year.
Right, but the fourth quarter, I don't think of a major inventory adjustment in the first quarter either of general customers. But there are seasonalities. There are seasonalities that is not we cannot avoid it. And particularly the big customers' seasonality. That is, I think, the only factor that affects the fourth quarter. But many things can still happen between now and then. So right now it's too early to tell.
Okay, thanks. My second question is from different angle. Intel is licensing ARM's physical IP for 14 and 10 nanometer process manufacturing. We know you don't comment your customer and competitor directly. However, from the industry and from technical perspective, how do you think the impact to the overall foundry and impact to TSMC going forward? Thank you.
Well, I think that strengthens the ARM-based CPU in the processing mode, and we have traditionally very strong in ARM-based ecosystem. It's not just the ARM, and also many architecture license people. So it's proof that in order to get to the non-data center world, this is the ecosystem you're going to ride. How much threat, we don't know. Of course, we never underestimate our competitions.
Thank you.
Next question will be coming from UBS, Bill Lu.
Hi there, good afternoon. First question is a follow-up on HPC. Mark said that this business becomes more than $15 billion by 2020. Can you talk a little bit more about the different segments of HPC and what do you think are the big opportunities within that $15 billion? Secondly, when I talk to your customers, it seems like a lot of people think that you need 7 nanometers for this to take off. So this is maybe hockey sticking after 7 nanometers. I'm wondering if you would agree with that. What is the linearity of the business? Thank
you. First part, you ask what is a component of HPC? Well, it's it includes many things associated with the data center. It includes the network processors, and also includes switches, and in our domain we include gaming and VR and AR and so forth. So for those markets, we are in a good position. However, for data center, we are trying to get into a good position. Yes, indeed, we see our growth. We expect our growth momentum will shift from mobile to high performance computing around 2019. So that's the ballpark estimates. It will depend on our 7 nanometer, but also there are many other processors. There are many other processors that are still using 10, still using 16 nanometer, and even 28 in this high performance computing sector.
Yeah, I'm sorry if I wasn't clear. I appreciate the answer, but I'm just wondering within HPC, if you can look at of the things that you talked about, data centers and switches and et cetera, VR, AR, how big is each, or maybe to rank them in terms of the opportunity?
Oh boy, I haven't bring it with me. So, but these are the industry models. There are existing industry models and we can estimate. It's not very special, not particularly TSMC's secret. Okay.
Great, thank you. My second question is on packaging. I think roughly maybe about a year ago, maybe a little bit more, you talked about info being about 100 million by fourth quarter of this year, with gross margin below corporate average. If we now look into the second half of 2017, can you give us the same kind of forecast for info and CoWoS, both in terms of revenue opportunity and margins? Thank you.
Well, I cannot predict that 2017 second half, but I can tell you that revenue will be greater, margin will be better.
That's actually a very happy answer. Let's go to the line now. Operator, please have the caller on the line.
Hi. My first question is, can you comment on your silicon content for smartphones for this year and next year? Maybe if you can specify lower and high end as before, that would be good. The second question is on your 10 nanometer yield ramp. Is the progress within expectation, or is that a little better or worse? And also, I think you commented that the shipments for the first product will start in Q1 next year, and maybe you can specify early Q1 or later Q1. Thank you.
Okay, first of all, I have to inform everybody the caller is from Goldman Sachs, Donald Lu. And Donald, your first question is about smartphones, average silicon content of the smartphone, right?
Yeah, and also high end, low end.
Yeah, that's right. You want the breakdown between high end, low end, and mid end. And then your second question is with respect to 10 nanometer in terms of the yield, as well as the projected shipments of 10 nanometer next year by quarter.
Yeah.
Hi, Donald. I will try to answer the first part of your questions regarding the content. If we look at the revenue per box on the smartphone, we have seen the dollar per box actually continue to increase, and 15, 16, slightly increase. And we expect the content will continue to increase in 2017 with a weighted average about $10 per box for us. So this is especially on the high-end part, that's where the increase is coming from.
So I remember the average content this year is about $8 per phone.
No, this year is more than $9.
You're talking about $10
This year is more than $9, same for last year. We expect the dollar will go up to about $10 next year.
Got it. Thank you.
Second question was with respect to 10 nanometer. The yield as well.
The 10 nanometer yield ramp, whether it's within expectations similar to 16 or is it more challenging?
It's similar. Of course, 10 nanometer is much tougher than the 16 FinFET as compared with 1 year ago.
Got it. And also you commented that you will enter volume production. The volume production takeoff will start in early next year, Q1 next year. Is that the guidance?
Yeah, we start production at the end of this year, but the wafer will be out in the first quarter and enter into the volume production after that.
Okay. So the volume production takeoff will start in Q4 this year.
That's right.
Got it. Thank you.
We can have the next caller on the line. Operator, please.
Thank you. The next question comes from the line of Brett Simpson from Array Research. Please go ahead.
Thank you very much. My first question on 10 nanometer, can you maybe talk about how many customers are committed? I know we talked about takeouts for next year, but how many customers in total are committed to 7 nanometer? And if you plan to convert your 10 nanometer capacity to 7 over time, do you think the peak capacity of 7 nanometer will be higher than 28?
All right, I will repeat Brett's question. I think he's asking us about 7 nanometer first. How many customers do we have at 7 nanometer total? And then if we will convert some capacity eventually of 10 nanometer to 7 nanometer, will we be able to generate 7 nanometer business eventually bigger than 28 nanometer business? Will 7 nanometer eventually?
7 nanometer,
and 7 nanometers capacity.
Yeah.
Okay.
7 nanometer customer are many. I don't remember how many, but more than 20. Many of them are working on their takeout next year as well as 2018. We expect the 7 nanometer business will, of course, will be larger than 28 nanometer. Capacity-wise, we don't. It could be comparable. Could be. It really depends on later on when the customer's product launch, how successful it will be. But we planning probably within. It's comparable within the range. There's no significant drop. Okay, it's capacity-wise. So in that terms, the business will be much bigger in dollar sense.
That's very helpful. And second question was on the Nanjing fab in China. Is that going to be TSMC moving existing capacity from Taiwan to China, or will it be incremental capacity you're having with Nanjing?
All right, the question is with respect to our Nanjing fab. Brett is asking whether we'll be using our existing capacity from Taiwan to be used in Nanjing, or will it be incremental capacity?
The majority of the capacity will move from Taiwan fab to Nanjing.
Okay, thanks so much.
Okay, let's come back to the floor. Next question will be coming from Morgan Stanley's Charlie.
It's also on 7 nanometer demand.
very strong for cycle time, shorter than your expectation. So is it possible you can bring in the mass production timing of a 7 nanometer to so-called late 2017? If your risk production in 1Q next year would be smooth. Thanks.
I hope our preparation can be ahead of schedule, which we're working on to ensure our customer, when they do the product launch, they get more matured condition. However, if you ask can we pull in the ramp, that will be affected by many factors. It depends on their product launch timing, and nor do we want to produce much inventory either. So that is a business decision rather than a technical decision.
Okay, understood. And also on 7 nanometer. So do you expect the customers' number or tape-out number to be more than 16 nanometer? I mean, because the 7 nanometer cost could be much higher than 16 nanometer. So when you communicate with your customer, how would they justify the higher cost in terms of photo mask, wafer price, IP cost, etc.?
Right now, it's hard. What I cited the customer number really is at this point. Okay, by no means the total number of customers. As any when technology gets mature, there are many smaller customers or more innovative other new companies will come on board. So if you look at the 16 nanometer, they're quite a bigger number than what I tell you on 7. But as time goes on, I believe 7 nanometer customer will continue to increase. One is in addition to the mobile application, I expect the high performance application, VR, AR, artificial intelligence application will come added to our customer portfolio, product portfolio. That is the reason we see. In one way, the entry barrier is higher, so less customers can get into. But the application of that technology will be wider than before. So that is what we see.
Okay, thank you. So that's very quick on the third quarter revenue upside. I guess the question is to Laura. So I just want to clarify. Do you think the revenue upside in third quarter mainly coming from the 28 nanometer or 16 nanometer? Because you mentioned that the margin dilution comes from 16 nanometer, so it seems to imply the upside coming from 16 nanometer in third quarter.
Actually, the third quarter revenue was supported by the smartphone growth. When I say smartphone, it's more than 16 nanometer. Of course, it includes 16 nanometer. Also, the companion chip that goes along, of course, to support smartphone.
Okay, so it's a smartphone demand across different nodes.
Yes.
Okay, thanks.
All right. The next question will be coming from JP Morgan's Gokul Harahana.
Thank you. The first question is on HPC. I think you provided a rough estimate of $15 billion wafer revenue in 5 years. Just to get some granularity around that, is that the total market demand, including IBM, fabless, everything, or is it just the foundry opportunity within that market? Because as you mentioned, some of the segments are very dominant IBM players. Some of them, like GPU, are a lot more fabless.
What I cited are the wafer revenue in terms of foundries revenue. But many of our fabless customers wants to get into that market, and any product can be foundry, by the way. Okay, so we just play together in that sector.
Okay, all right. So would you say that server is still a big portion of that opportunity, or you're not including the server opportunity, which is predominantly IDM, in that 15 billion?
Server is included in that opportunity.
Okay, all right. Second question is on 7 nanometer. I think you mentioned about 15 customer tape-outs already ready for next year. Are there a significant number of HPC-related tape-outs there, or the starting tape-outs are mostly high-end mobile in that 7 nanometer?
There are a significant number of HPC tape-outs. But in terms of volume, it will be high, mobile product volume will be much higher in the beginning.
Okay, and maybe last one, I think you mentioned 10 nanometer, you'll have more than 70% market share. Any rough thoughts on 7 nanometer? It's going to be 90 to 95%. Any early thoughts on how you think about 7 nanometer market share?
High, you said higher.
Higher than 10.
We want to do every node is higher than the previous node.
Fair enough.
Next question will be coming from Credit Lyonnais, Sebastian Ho.
Thank you, Dr. Song. My first question is on the packaging business. So ingoing CoWoS. If I understand correctly, that the TSMC will take full responsibility of the packaging of logic and memory. And my question is that how to split the yield issues of memory with the memory partner. And as this part of the business continue to grow in terms of revenue percentage and dollar amounts, and how do you expect this to, will this increase the business risk for you, and how do you see that impact your risk, yield, and profitability?
To answer your question, no, we don't have full responsibility, as you said, on the memory portion. Memory will work with a memory supplier, but it's mainly their responsibility to make it reliable and fully functional and can be cooperated into inverter technology. But we don't have the full responsibility, as you just mentioned.
I think my question is, sorry, I should have asked more clearly. So my question is, when the packaging, for example, it failed, the yield rate is not good, but you have to be responsible for that cost, including memory cost.
Oh, that's a good question. Once the parts fail, which we don't expect too often, of course, once the parts fail, we trace it back, we work with the customer, identify who the responsibility is.
Okay. So the yield rate is, that the yield rate problem is led by your memory partners, and that cost will be attributed to them, but not you.
That's correct.
Okay. And my second question is a very simple one. Just I noticed that your 0.11 and 0.12 micron revenue increased quite a lot in terms of quarter-on-quarter and year-on-year in third quarter. Can you give us some hints and colors on what type of application and products of that? Thank you.
Okay. On 0.11, 0.13 micron, we as I mentioned, we developed some specialty technologies. And so I give you the one of major reason probably is some of the power management IC.
Thank you.
Next question will be coming from Daiwa's Rick Xu.
Yeah, hi, good morning. Good afternoon. My first question is, I think Laura was talking about your revenue CAGR in the next 3 to 5 years will be 5 to 10% per annum. I'm wondering if you could give us some ballpark number. If I want to break it down of the incremental revenue increase across the board with your 4 demand drivers, that include your HPC, mobile, auto, and IoT. Could you give us some idea of how the contribution from each category?
I cannot. I think Mark said last quarter, in the 5-year time frame, half of our growth will come from the mobile field, and about a quarter for high performance computing, and the other quarter will be from IoT. That's the ballpark.
All right, thank you. All right, the second question is, I think this year your revenue growth is going to be pretty strong, which you were like 10% guidance, and that also increase the comparison base for next year. So if I want to ask for some color about your next year's growth, it's going to be a 5 to 10% range. Would that be close to the lower end or higher end?
I will not comment 2017 growth in this moment. You can just follow our indications. We still believe in the 5 to 10 years compound annual growth rate will be between 5 to 10%. Of course, some year will be higher, some year will be lower, but this is our goal to drive the compound growth rate 5 to 10.
Thank you so much.
I think we will need to go to the line first before we come back to the floor for the follow-up questions. Operator, could you please have the next caller on the line, please?
Thank you. Our next question comes from the line of Stephen Palanga from HSBC. Please go ahead.
Yes, a couple of clarifications first. Your China revenue, we're talking about the revenue, you have to mention China revenue in dollars is down pretty significantly. I think that in the third quarter, I'm surprised that was kind of what we see in China smartphones. Maybe you can comment a little bit about what's going on in China, what you're seeing there in the fourth quarter. And then the second clarification is the question I have is just on gross margins. You said that around 50% for next year. I'm curious if that's more of a full-year number or when I think about it on a quarterly basis, you talk a little bit about seasonality among customers, rising depreciation, and then actually smooth a little bit as well in the first half. I guess I'm worried a bit about first half next year. Gross margins, and they also still be close to 50% in the kind of soft period. So there might be my clarification there.
Stephen, you talk so fast, it's even beyond me. So I haven't caught your first question quite well, but I think the second question you want us to explain about gross margins for next year, right?
Primarily during the seasonally soft period, for the first half of the year, I think your gross margin still sustain about 50% as you projected, I think, for the whole year.
Are you asking about 2017? Okay, yeah. 2000.
Correct. First half next year, in the seasonally softer period, and gross margin sustain 50%.
I will not particularly comment on quarter gross margin outlook, but if you hear what I said earlier, and the longer term we intend to keep about 50%. Of course, some quarters depend on the seasonality and utilization rate may kind of swing a little bit, and we have the 10 nanometer, which will be dilution to our margin as it comes on. But over and over, I think 50%. About 50% is probably good directions.
Okay. So just my last long-term question. Midway through the third quarter, one of the competitors now, Intel, seems to reboot their foundry effort. TSMC has been under attack many times over the years, and you guys have done a great job with your scale, your tech leadership, business relationships, kind of customer agnosticism, if you will. I'm just curious, is there anything different this time with some of the competitive threats out there? Are you hearing any differences from a customer perspective or even from a competitive perspective on pricing or on things, incentives, or just a general speculative that's going on right now? Any thoughts on competitive landscape come on?
Stephen, can you speak slower? Because really, the bandwidth is very narrow, so only part of the spectrum is received.
So, Stephen, if I understand you, maybe I can sort of summarize your very long question. You are just asking what's the impact of TSMC if Intel becomes very serious about foundry, right? Okay.
Well, there's certainly a threat in the last 90 days with a greater level of intensity. And so I'm curious if anything different from a competitive landscape perspective this time around. in the past you've done a great job fighting competition. Do you see anything different this time around?
We intend to do a great job going into the future too.
Okay, thank you.
Thank you, Stephen. Let's come back to the floor. Okay, follow-up question. First come from Credit Suisse, Randy Abrams.
Thank you. Last year there was CapEx savings where the mobile products migrated 20 to 16 and there was capacity conversion. Could you talk about the outlook for the 16 node if you expect to backfill as some of the leading products move, or you could see the same type of move of converting capacity from 16 down to 10 and 7? And then is it efficient to make that capacity conversion?
We build our capacity according to the demand, of course. And so the next year we expect customer move, especially the high-end smartphone, the move from 16 to 10. And then we expect the second wave and third wave of customer to enter into 16 nanometer. So far, we will convert some of the 16 nanometers capacity into 10. We will, if the demand is not as high as this year. Okay. And we are talking about the converting efficiency, quite high.
And when you're saying it's your base case, it's no conversion. It's only on a demand disappointment that you make. Like your base case is you can fill that capacity. The second question, you used to disclose IDM business every quarter. It's no longer in the quarterly, but IDM last year grew from 15% to 18%. So it's actually a reversal that IDMs grew as a percent of sales. If you could talk about that bucket, which it seemed like it would continue to come down relative to fabless, but with some of the mergers like NXP Freescale, are you seeing, as a result of that, any change in outsourcing or for your overall IDM business, any change?
Did you say the IDM revenue growth is 18%?
The annual value was 18. The year before was 15.
IDM?
For IDM.
IDM outsourcing IDM.
Well, just IDM as your percent of revenue, like the total bucket of IDM.
We indeed, our growth more recent years come from fabless, also from IDM outsourcing, and from system companies. As a matter of fact, if I look at the recent history, the growth fastest is from system companies, then the IDM outsourcing, then the fabless growth.
If I can add, this year the number will be similar to last year. Okay. Next follow-up question will be coming from Citigroup's Roland Xu.
Thank you. Just one follow-up question for your inventory level. I know your inventory is mainly from WIP and also finished goods. However, looking at this 3Q, you have a 17% higher revenue compared to second quarter, but your inventory have been declined about 10%. Agree, you said that you ship off these WIPs. However, in 3Q, you probably have a much more wafer start also. So that actually will be turned to the WIPs. Yeah, so I just want to understand, how is the percentage for your finished good in your inventory? Did you ship off this finished good to your customer in 3Q?
A simple answer is yes. We have very low finished goods inventory. If you understand our business model, that's the way it should be. So the majority part of our inventory is WIP. Okay. So when we're talking about the cycle time, it does help to reduce the inventory because you don't need to build up earlier. So you can do pretty efficiently.
Okay, so can I ask, how much cycle time you have been reduced in 3Q?
Actually, most of the cycle time reduction come from the manufacturing side. I give you one example. I cannot nail down that between the second quarter and the third quarter, but I tell you that last year and this year, we probably improved by 20%. We shortened the cycle time.
Okay, there are follow-up questions. First, from Morgan Stanley's Charlie Chen.
Thanks. So Mark, a couple of weeks ago you announced that TSMC is going to kick off the 3 nanometer R&D, but that doesn't really show in your competitors' roadmap, not even the 5 nanometer. So what is TSMC that your competitors don't see? In terms of technology breakthrough or any customers is demanding for that 3 nanometer? Thanks.
I'm sure our competitors are working on it. So I just had the chance last week in TSIA's annual meeting. I spelled out our 3 nanometer status. And everybody's working on it, I believe, at least the top 3 or 4. And still in the pathfinding mode. And how to do the transistor, I think everybody is still searching it. It is not obvious at this point. But that is what the research is about. So we intend to invest heavily in the much forward-looking R&D, anticipating all kinds, both in the Moore's law scaling as well as the 3D IC integration. So we intend to fulfill the future system requirement this way, and to customize, to fit our technology just for the future system requirement, instead of just so-called CPU cadence.
Thanks. So, in your long-term revenue mix, so Rory just mentioned that long-term your mix will be held from mobile, 1 quarter from HPC, 1 quarter from IoT. So what is it today? I mean the mix today from these 3 segments.
We didn't separate the revenue on the way you described. We just have a communication, a computer consumer industrial standard, which you can find from our management report, which a very big part is communication, and the increasing important part is industrial standard, computer getting smaller.
Okay, follow-up questions also will be coming from Credit Lyonnais' Sebastian Ho.
Thank you. I have a questions from more from in terms of margin from the application perspective. So if you look at your future growth driver, smartphone, which is mobile, and high-performance computing, and automotive, and IoT. So we understand mobile so far account for a large chunk of your business revenue contribution, and automotive and high-performance computing right now is still relatively smaller, but I believe this part will be, presumably these two businesses will grow faster. So in terms of the margin, will these two parts of the business carry higher than the other business margin? And how do you see this impact your margin? Will it bring more upside to your margin down the road?
Right. Laura just mentioned we try to keep our around 50% margin. Now, of course, the higher the better, and we want to work on our value add for our customers.
Okay. And my follow-up questions on that is on your 7 nanometer, because you have 2 variants for mobile and high-performance computing platform? And do you see any margin or probability difference between these two variants?
At this point, it's too early to say. We're just working with our customers. You know, the price changes year by year. So how it pans out is yet to be seen. I certainly hope the high-performance computing margin is higher than our mobile, because look at the Intel's margin. But we still, at the same time, want to enable our customers to enter that high-performance computing market, and that is a consideration. At this point, we do not assume major differences, but of course, we work with our customer to get their margin high, therefore we benefit our margin too.
Thank you.
All right. Finally, the follow-up question will be coming from Deutsche Bank's Michael Zhou.
The outlook by segment Q4.
We have guided kind of flat fourth quarter. So on the segment side, we expect communication and computer will grow slightly, and consumer industrial will decrease. So net is kind of flat.
Regarding the 16nm market share, what is the expectation for next year versus this year? Would that be similar?
It will be similar.
All right. In that happy note, we will conclude this quarter's conference and conference call. Thank you for joining us this time, and I will see you next quarter.
Okay. 我拿哪一支呢？我拿你，我都拿。
那个赛克看这个好问题。
或者是就
It's going to be in the first quarter.
可是你还要去那个对吗
OK.
你要帮我麦拿，等下拿我的麦收音啊。另外一只长的那一只，请问地上长的那一只，试一下。
好，喂，你在做直播吗？
对啊，为什么办这个？没关系，这种就是我们先去啊，再有就跟他们跟我们不是一样的，这个来。好了，来我们看中间这一台，谢谢。
不好意思，今年的电影快播完，那明年的电影开始会去。
明年资本支出，我们现在并没有打算给一个比较正确的计划。我想我们在下一个法说会的时候，就是1月份的时候，我们比较正确的。但是因为我们明年要 run 我们10奈米，那是一个要增加产能最多最花钱的，所以有可能资本支出会比较高一点。这个应该问外资啊。我想是大家对我们的 technology position 是有信心。16奈米是照我们当初预期的执行的很好。现在这个10奈米跟7奈米是照原定计划变得落后，所以那这是一个原因。那我们对于成本获利能力的这个掌握和控制也是这个非常严谨，所以我想应该是这些原因吧。没有照我们的计划进行。10奈米，我们明年第一季就会有量产出货那7奈米会再往后。我想我们不太方便comment日本的状况，我们只是 work on 我们的 part， 好好把我们的这个客户给照顾好。OK， 好吗？
可是他刚讲出来，稍微